Let's take a look at oil prices this morning. Brent crude at about $82 per barrel, while West Texas Intermediate is about the $78 per barrel levels. That's, of course, earlier this morning, of those oil prices remaining in that range-bound levels between that 78 level and 82. Aramco, Saudi Arabia's oil and gas company there, is increasing its dividend in spite of declining oil prices that we saw in 2023. Total payout amounting to about $31 billion. And the dividend to the Saudi government is actually higher than it was in the 2022, despite oil prices being lower in 23 than the average in 2022. We're speaking to Dr. Carole Nakhle, who's the CEO of Crystol Energy, about this development. Dr. Nakhle, thank you so much for joining us. Good morning to you. What do you make of Aramco's dividend payout despite lower oil prices in 2023?
Good morning. Well, it may come as a surprise to many because usually you would expect when companies, they have lower earnings because of, let's say, lower oil price, then they tend to maybe reduce their dividends compared to years where they had much better performance. But there are a few things that we have to remember about Aramco. So whether it pays more or less, at the end, it is money going from one pocket to the other because it's a state-owned enterprise and their major shareholders, more than 90%, is the Saudi government. But it's not just the revenues that matter. Also, you have to remember that Aramco announced a major revision to its previous plans for capital expenditures. That was to expand their production capacity to 13 million barrels a day, but now they ditched that plan. And that by itself means they have more money available for other things, to sponsor other projects and also to pay more dividends to the Saudi government, which needs the money in a lower oil price environment. I don't want to call it low because 80 plus is not low, but it's definitely lower than what we saw in the previous years.
Very true, very true. Do you expect OPEC Plus to maintain its production cuts?
If they want to keep prices at these levels, because so far they have succeeded in putting a floor to the oil price around $80 a barrel, and given the fact that we have not seen any major fundamental changes on the demand, on supply outside OPEC, so really the status quo is likely to continue, then I don't see the need for OPEC Plus to change its policy because the market realities have not changed, and it benefits the members to keep prices in that level, let's say 80 plus.
Now, Saudi Arabia, UAE, Qatar, all using petrodollars to diversify their economies. Do you see any irony there in using fossil fuel revenue to diversify away from fossil fuels?
I wouldn't call it irony. I would call it a virtuous circle because they are oil and gas dependent economies. And actually, it makes sense to recycle those oil and gas revenues to expand non-oil sector, to encourage investment in other sectors, and including in green energy, in renewable energy. So this is where I would say the Gulf region, the Saudi Arabias of this world, UAE, Qatar, and Kuwait, they are in a position whereby they are using the oil and gas revenues, the fossil fuel revenues, to invest in the energy transition. And they may stand, because of that, a better chances than other countries where the capital is constrained. So I wouldn't call it irony. I would call it a virtuous circle because of what is the realities of these economies.
Point well made, and point well taken as well. Have you been taking in oil prices, considering what's been going on in the Red Sea? Some folks were actually killed on a vessel after the last time we had you on the show. Have you been seeing the reaction with oil prices?
No, I haven't seen really any reaction to the Red Sea, not because markets are ignorant or they are stupid and they cannot absorb those disruptions. On the contrary, markets are pretty efficient in allocating the resources and reacting to these changes. But so far, those attacks in the Red Sea have not affected the supply of oil. We are seeing diversion of supplies going, let's say, around Africa. We are seeing delays. We are seeing higher insurance costs, but we have not seen any major supply disruption to justify an increase in oil price from what we are seeing today. So yes, it's a geopolitical risk, but so far market observers also see that not only haven't been any supply disruptions, but the risk of escalation in the region seems to have dissipated. I don't think there is much appetite about expanding the current conflict in the Red Sea, in Gaza, beyond that area.
Do you see any I guess, and this is hard to tell, but black swan events between now and the end of the year that could, propel oil prices upwards?
You can always have black swans, right? How many of us were able to forecast the pandemic, or how many predicted well in advance, let's say, Russia's invasion of Ukraine? So, of course, black swans can always happen, and hopefully they won't happen. But still, I believe that today the global economy is better equipped to deal with energy crisis than it was, let's say, only a few years ago, because of the diversification of sources of energy, because of efficiency improvements, and demand is not really booming. So we're not looking at the first decade of the century when demand from China and India and other BRIC countries was really roaring up with vengeance. Here today, we have a much more tame demand. So even if there is a black swan, you cannot rule it out. I don't think the crisis would be long-lived or seriously damaging to the economies around the world.
Thank you so much for that. Our final question for you, Dr. Nakhle. We've, of course, been celebrating women this month. I want to ask you about, of course, your initiative, Women in Energy. You're one of the best analysts that, are out there on the energy sector. Are you seeing, since you've come into the industry, are you encouraged by the amount of women that you're seeing in the oil and gas, in the energy space?
It was International Women's Day, but also Mother's Day here in the UK on Sunday. So I salute every single woman that is out there, because we do a lot to support the world, running around. But in the energy sector, yes, I have seen great progress achieved over the last few years, and at least compared to when I first joined the industry in early 2000, but we still have a long way to go, because when you start from a very low base, you need not only to go at a similar pace as other sectors, you have to put much more effort to establish a real balance and equal gender representation. And not only in terms of the analysts that you find out there, and there are many of those. I want to see real change at the leadership. I would like to see more women at OPEC meeting on the leadership level. This is where I can believe that the real change has happened.
Fantastic. Thank you so much for your time, Dr. Carole Nakhle, CEO of Crystol Energy, and of course, head of Women in Energy. We thank you for your time.